Hey, welcome to the 40 Finance channel, everybody. My name's Jeff Beers. Today I'm going to be talking about ad tech stocks, and we have two sides to ad tech, right? You have platforms themselves, such as Roku and Snapchat, and then on the other side, you sort of have the internal engine that makes ad tech flow, and that would be service providers such as Trade Desk and Magnite and PubMatic. So those are the five stocks that I'm going to compare and contrast here going into Q4 of 2021. And the reason that this has been sort of churning in my brain here recently is that obviously with holiday shopping, advertising goes through the roof here in Q4. So the question I'm kind of asking today is which ad tech platform or service might be the best one to jump on now before Q4 earnings are exposed sometime in January. One thing that's intriguing about these five ad tech names that I'm featuring today is they're sort of flatlining a little bit over the past couple quarters, and when we saw some volatility a week or two ago, the prices for all of them came down a few notches. Q3 in advertising is sort of a low advertising month in terms of revenue volume. Most advertisers use Q3 basically to prepare for Q4. So what we might actually see from ad tech, and this is just my speculation, coming into this earnings report period where they're reporting on Q3 earnings, we'll probably see some weakness, certainly less growth than we've seen in the previous quarters. And that's probably going to get buyers a little bit down on the stock, not necessarily selling, just not getting super excited. And it's going to be this kind of show me situation for Q4. So if you believe that Q4 offers incredible advertising opportunity for these companies, then the purpose of this video is to stack five against each other and maybe find which one has the best value versus the most upside. All right, so let's kick things off and introduce these stocks, and I'm just going to sort them by market cap. Then we'll dig into each one. I chose Snapchat, Roku, Trade Desk, Pinterest, Magnite. Magnite is a stock I own, by the way, the only one I own out of here, and then PubMatic. So obviously Snapchat's a platform, Pinterest is a platform, Roku is a platform where people actually consume content that is subsidized with advertising. Trade Desk, Magnite, and PubMatic get back into that sort of technical inner workings of advertising, and they're basically marketplaces at the end of the day. Each one has their own different angle. Trade Desk is more targeted to a broad ecosystem, almost like a stock exchange in a lot of ways, where you can buy and potentially sell inventory and try to maximize your advertising spend across different platforms and different types of advertising. Magnite, on the other hand, the one that I own, they're more responsible for the publishers, right? Maximizing the advertising inventory, getting the most dollars out of the advertising inventory. And one of the reasons that I chose that stock to purchase a few months ago was simply because they have a nice client list, a nice baseline client list of inventory that they manage. And they're also going out and acquiring smaller companies. Ultimately, the end goal for Magnite is basically to buy up as much real estate as possible, whether through acquisitions or new contracts with publishers, to be almost like the number one real estate holding, if you will, of digital advertising land to some extent. Now, PubMatic actually sits a little bit in between Magnite and Trade Desk, whereas they're offering sort of the technology, a cloud-based technology solution to manage advertising flow, whether you own an app or property that sells advertising, or you're the advertiser itself who has certain concerns, maybe about brand safety, where things are being displayed, how they're being displayed, etc. PubMatic kind of comes in and it helps you to maximize the money that your inventory is making, but also offers different levels of safeguards in a kind of open source environment. All right, so that's the quick intro on the candidates we have here today. And just for fun, since we're on Morningstar, we'll take a look at their valuations from a Morningstar perspective. Please keep in mind that some of these are high growth names and they're not really going to fit into a Morningstar model that can be, based on fair value and stuff like that, because they simply don't have the same fundamentals that a large cap or mega cap stock, like just say Amazon or Apple, would have. I always like to look at fair value on Morningstar. I think it's a good indicator on where stocks sit. You will typically find high growth names with high valuation prices to be over their fair value quite a bit in Morningstar. So let's see what we have. First off, Trade Desk, Magnite, and PubMatic have not qualified in Morningstar's world for a fair value assessment yet. So keep that in mind, that analysts at Morningstar have not assigned a fair value. This price to fair value, so 1.00 means you're right at fair value. And anything over that you could argue is overvalued. Anything under that you could argue is undervalued. Roku comes in at 1.93. And then we have Pinterest on the low end at 75% of their fair value. So out of the qualifiers in Morningstar's world, they have Pinterest in as the cheapest option. Notably too, Pinterest they've given a narrow moat rating to, whereas Roku and Snapchat do not have a moat per Morningstar. All right, now we'll pick off some metrics from Seeking Alpha. They have a nice comparison table that you can put together. I'm not going to read off everything on here. But let's just go through the basics. We talked about market cap. PubMatic is obviously the smallest. Then you go to Magnite. Then at the top of the chain, let's see, is it Roku? No, it's actually not. Snap is well above 3x Roku on market cap. So that to me is surprising. I don't think I would have recognized Snap being basically 3x the market cap of Roku, because I feel like I see Roku articles everywhere. If you wanted to get into employees, which is always interesting, Trade Desk at 1,500, Magnite just over 500, Roku has 2,000 or so employees, Snap has almost 4,000, Pinterest at 3,000, PubMatic right at the Magnite level, just over 500. Then we look at the coverage. The smaller the stock, as you see with PubMatic and Magnite, the less coverage you're going to get from Wall Street analysts. Trade Desk, I'm a little surprised, only has 20. Roku has 25. Snap and Pins are in the 30s. All right, scrolling down to sort of author sentiment, if you will. We have the Seeking Alpha quant formula that gives a bullish or bearish signal, also neutral as we see across the board. For Seeking Alpha authors, we have bullish across, including very bullish on PubMatic and surprisingly neutral on Snap. Then we go down to Wall Street analysts. You have bullish on Trade Desk, very bullish on Magnite, bullish on Roku, Snap, Pins, very bullish on PubMatic. All right, let's scroll down to valuation with the intent on finding a balance between attractive valuations versus growth prospects, which is the next columns that we'll look at. And what's nice about Seeking Alpha, they do use a non-GAAP metric, which comes in handy on growth names to compare them against each other, because a lot of growth names report in non-GAAP. So if we just eyeball PE for non-GAAP fiscal year 1, which would be the one that's going to end here soonest, depending on when the company reports it, you got Trade Desk over 100, Magnite 48, Roku 248, Snap at 214, Pins at 49, PubMatic at 59. So right off the bat, you can get off of triple-digit PEs by looking at PubMatic, Pins, and Magnite. Now, if we skip ahead to the 3-year projections, which are a little bit of a gamble. I don't know how many people can accurately project 3 years out, but we'll take it for whatever work they've done on it. You got trade desk price today is about 71 times the 3 years forward non-GAAP EPS, right? Magnite at 26 times, Roku at 114, Snap at 47, Pins at 25, PubMatic at 42.39. So looking at this chart, you have Pins and Magnite, at least from a projection standpoint, right? And that's the key here. We are going off 3-year projections. It's not always easy to do that. And when I say not always easy, I'm referring to the fact that projecting a business future 3 years in advance in an ad tech space that's constantly changing, it's probably pretty hard to hit the bullseye. But at least for what analysts see now, you've got Magnite at the cheapest valuation for this 3-year metric. The other thing that's interesting on the 3-year metric is you still have Roku in triple digits, right? So as popular as Roku is in stock market circles, I guess you would say, on social media, an investment in them today based on price to earnings would come in still triple digits 3 years later. Even Trade Desk, which is the next highest valuation, gets into double digits in year 2 and continues into year 3. All right, now let's get into revenue growth. And I'm just going to skip ahead to forward projections here. This first line is year over year, so it's current versus past. Now we're going to look ahead to forward. Trade Desk projected at 31% revenue growth, Magnite 50%, Roku 50%, Snapchat 53%, Pinterest 44%, PubMatic 31%. Now looking ahead on EBITDA growth, if that's something you follow, you got plus 38%, plus 89% for Magnite, 148 for Roku. Looks like they couldn't come up with the number for Snap or PubMatic for whatever reason. And Pins EBITDA up 300%, at least projected for next year. All right, profitability, gross profit margin. Let's just skip ahead to EBITDA margin. 24% for Trade Desk, 13 Magnite. Roku's about 13. Snap is still losing money. Pinterest just below 13. And look at PubMatic beating everyone at 31%. All right, quick peek at income statements, and we'll try to do it on something like a per share basis to bring some clarity between the companies because some are bigger than others. You have Trade Desk, $2.20 per share. Magnite $2.75, Roku $18, Snap $2.25, Pinterest at $3.61, and look at PubMatic at $5.81. Diluted EPS per share 53 cents for Trade Desk, Magnite at 16, Roku at $1.72. Snap is negative, Pinterest 25 cents, PubMatic 55 cents. All right, lastly on the fundamentals, total cash per share, $1.47, Trade Desk, $1.47, Magnite, $15 for Roku, Snapchat $2.18, Pinterest $3.32, PubMatic $2.42, and then on the debt side, we have Trade Desk, almost $300 million, Magnite, which just got done acquiring a couple companies, so they're in at $775 million. Roku, $463, Snap, almost $3 billion, Pinterest, $121 million, and PubMatic sits over here with no debt, at least showing on this chart. All right, so we've looked at the fundamentals of each company, we've looked at the growth rates, we've looked at the revenue projections, and we've even poked into Morningstar to see what information would be covered on some of these. Now it's time to kind of take that information together and make a projection for this Q4 season if you believe that advertising dollars in Q4 are going to explode, which is something that I believe, and you want to try to get a piece of it. Which of the companies we're talking about would you be interested in buying, or should you buy based on fundamental evaluation? So I will say, going through the statistics there that we just went through, you have to be impressed with where PubMatic stood in terms of fair valuation versus growth. So I'm in on Magnite, but out of the data we just saw, I would say PubMatic is right there as one of the more fairly valued companies out of this batch. You'd also have to put Pinterest in there as well. Catch for Pinterest, of course, is what we've seen with their user growth over summer. It just hasn't been there. In fact, it was slightly negative in the United States, though still growing international. So with that in mind, Pinterest isn't one for me, but I will say that Pinterest valuation is much more attractive than some of the other big names on there, such as Trade Desk and Snap. So if you're going to go for like fair value or valuation only, and you wanted a bigger company that's actually producing EPS, it would be hard to argue against Pinterest at its current price. The thesis that you have to have, in my opinion, is that whatever setbacks they had in user growth and engagement, they get past it as winter comes, people are stuck at home, social media becomes more popular. All right, for the last chapter here, I'm going to show you TipRanks and what analysts are thinking about each of the stocks covered here to try to give you an idea on what other people are projecting for these names. All right, so a quick peek at each of these in TipRanks. My affiliate link for TipRanks is in the description if you're interested in learning more. We are only going to look at the top analysts, as I always do, and we are going to only look at the freshest scores, try to filter out some of the noise. So it looks like 29 days ago and up on Snap is our most recent signals coming in from analysts. You have 1, 2, 3, 4 buys, no holds, no sells over the past 29 days. And upside, 23% looks to be the high, followed by 13, well, here's a 15, and then the low is about flat from here. Let's take a look at Roku. Roku has similar updates 23 days ago. You've got 4 of them, and we've got a buy for $5.50, 69% upside. That just came in yesterday from Laura Martin, who's very well known in the industry, so very interesting there. Then we have a buy, 72% upside, came in 9 days ago. We do have a sell here, Morgan Stanley, $310. That was about 2 weeks ago. And we have a buy at $395, which is about 21% up from today. So with Roku, it does look like it's kind of a tale of two cities. You have, slight downside, maybe flat, moderate 20% upside by 2 names. And then the 2 analysts at the top are going to the moon, basically, over the next year. 70% upside for Roku. So it just depends on who you're listening to with this one. All right, same thing for the Trade Desk. Not as many fresh updates here. We'll just go with the last 3. 2 months ago, you had a hold at 85. Granted, that was 60 days ago. 18 days ago, we did get a buy come in with a 33% upside. And yesterday, Laura Martin came in with a buy on Trade Desk. No surprise that she's probably very bullish on Roku, right? And then Trade Desk has a lot of connected TV interests. So if I had to guess without speaking for her, the connected TV space looks like Laura is very bullish on that world. All right, Pinterest. Let's see what we've got. We got 30 days ago and under 3 holds for Pinterest. 3 holds. Now there's upside in here. $57, 8% upside. $68 would be 29% upside, and then about 10% at 58. Again, Pinterest, that last earnings report with the user engagement and growth was a real killer. On the profit/valuation side, you'll struggle to find a better deal. As we looked at those stats earlier, the question now becomes, is it a value trap or are people underestimating it? All right, Magnite. Not as many updates, mostly because this is a small stock. So we got last month, $46 buy. That's a 54% upside. And then here's Laura Martin again, 4 days ago. $70 price target, 135% upside. I believe that beats even her Roku bet. So depending on how you think about it, I'm more inclined to say over the next 12 months, since I own this one, I think 40 is definitely possible. Anything over 40, I think, will require outstanding performance over the next 12 months, which is not out of the question. But I am probably not in the 70 camp. I would love for it to happen, but I bought into Magnite knowing that there's a reasonable ceiling in the $40 range. All right, last one here is PubMatic. And it's our smallest one, so not a lot of updates. We have to go back like 2 months ago. The most recent one did not give a price target. But if we figure that, the bull case is still standing up to 60 months ago, you have a lot of positive buys, 37, 50, 44, 43, anywhere in the neighborhood of 27% upside all the way up to 120% upside. And if I had to guess on the median, it'd be somewhere here in this 50% upside range. All right, guys, so that was a deep dive on ad tech valuations and projections going forward. I'm happy with my Magnite position. I'm happy to buy it under $30, and I think that it will hit a few under $30 days. It already has just a couple weeks ago. And next on my list is maybe a trade desk, maybe a Snapchat, but I do need to see some of those prices come down a little bit before I feel super comfortable about it. Between the two, I'll say that I like Snap a little bit better. I don't own a social media stock, so picking up a full platform. So I don't own Facebook directly. I do have, obviously, ETF exposure. I don't own pins directly. So Snap is intriguing on some levels, but I'll be interested to see what they have in store for their Q4 holiday shopping period and how the engagement rates are looking. All right, let me know which ad tech stock you're most interested in the comments below. As always, thanks for watching. We'll see you on the next video.